Hi everyone, welcome to the Panhandle Research and Technology Tour Plus, hosted by the Panhandle Research and Extension Center in Scottsbluff, Nebraska. This event was recorded on December 2nd, 2020.
I'd like to introduce Jessica Groskopf, the Ag Economist here at the Panhandle Research and Extension Center. I'll let her get going. So Jessica, I think you just need to share your screen and take it away. Quickly, if anyone has any questions while Jessica's speaking, just go ahead and type it in the question and answer box, and we'll answer those when she finishes her presentation.
Awesome. Well, thank you, Nevin. And before I share my slides, I just want to, again, encourage you to place some questions in the chat. My favorite part of my job is getting to interact with all of you, and COVID's been a little rough on me because I haven't had that opportunity to sit down across my desk or across your kitchen table and talk to you about what's happening on the economics and business side. So please feel free as I go along. I've got a couple of pause points where I'm happy to answer your questions. So Emily, it says, nope, never mind. All right. So I want to start out today by talking about a little bit of grain marketing and specifically on the corn market. When we met in August, we were in a really different place than we are today. So starting with the USDA World Agriculture Supply and Demand Estimates Report, I want to start by comparing August estimates to November estimates. And what we're going to be comparing is those kind of pink shaded columns there for the 2020 crop. And there were some big things that happened since August, since we were last together. And the biggest thing is the derecho that swept across Iowa, and then also some late onset drought. So as we look at the estimates, again, this is the World Agriculture Supply and Demand Report. This is the report we sometimes like to cuss because it makes the market jump up or down. Right now, we're cheering for this report because every time it comes out, we see that average farm price at the bottom move up a little bit higher each time. So what we see on this report is that the biggest adjustments were the harvested acres coming in November at an estimated 82.5 million acres. We also see that they adjusted the previous year's ending stocks down. And basically what that means is that we're seeing the total supply or total production that we expect here in the United States to be down. That decrease in supply ultimately comes to lower ending stocks overall. But we're also seeing a lot of movement on the export side, mainly from China, as China rebuilds its stocks from a poor production year. And so we're seeing a lot of exports in the corn market. Now, the corn market usually isn't an export market that we're worried about. Normally, we're more concerned about domestic use, but because of the exports, we're seeing that market come up. Overall, as we look across the bottom of the screen, you can see that since August, the price estimate for the 2020 crop that we just harvested has come up an entire $1. And so that's something that we're really interested in. So as I look at that, I think there are two numbers that I'm watching carefully. That's that export number. If that export number comes true, it's going to be the highest exports on record for corn. And then if we look at the ending stocks number, that ending stocks number would be the lowest ending stocks we've seen since about 2013, 2014. So that's why we've seen this rise in the corn market. A lot changed late in the season. Now, if we go back to August when I was talking to you, we were talking about that 310 level, and you might have marketed some grain at those lower price levels during the growing season. And now you're looking at 410 and saying, boy, I should have waited. But this is not a typical price pattern for the corn market. And so, one of the things we'll talk about is being happy with the choices that you've already made for the 2020 crop and looking forward to what the market is telling us as we move into the winter months. So just to give you an idea What we're looking at is U.S. Corn use. And again, I want to drive home the point that exports are traditionally not what we're talking about in the corn market this year. And now we've switched from bushels to metric tons. But this year we're looking at about a 10% export market. And again, that's would be the highest export market on record if we actually obtain that. The piece that we traditionally watch here is looking at the total ending stocks. And I see that Tyler Kennedy has his hand raised. Tyler, are you able to unmute yourself and ask a question if you would like? All right, Tyler, I think you can talk now if you'd like to unmute yourself and ask a question. All right, it looks like it's hard for you guys to unmute yourself. So if you want to go ahead and continue to type questions into the Q&A, we'll monitor that and keep going. I know Nevin is watching the chat, so he'll be able to stop me and go ahead and ask me those questions that you do have. So please go ahead and use that feature if it's available. Does the total export value have a deficit effect? And I think what you're asking is yes. So what we're looking at on this export value number here is that we're subtracting off basically that export value. So what we're looking at is the difference in the two gray bars, the total supply and the total use. And the more we have exports, the more use we have. So then we're looking at a lower ending stocks value. If that did not answer your question adequately, please put some more in the chat, and I'd be happy to continue to clarify that more clearly. But yes, the arrows here just indicate that the estimate was up from the August report. So yes, this is a subtraction off of the total supply that we're looking at. Let's see if I can get my PowerPoint back here. The other thing I would like to point out is that I'm really watching this global ending stocks picture, and I find something that's interesting is looking at is the world and the United States compared to the world. And about in the mid 1980s, we actually saw that the rest of the world started carrying over more corn from year to year than the United States is. So what I'm really watching is how much corn is available globally. And even though we're not a big exporter of corn, this is something that does drive the corn price. So we're watching to see how much corn is truly out there. And one of the challenges we have is battling the amount of ending stocks or the amount of carryover that we see in the corn market. All right. I don't see any questions coming up yet, so we'll continue on. So one thing that I like to talk about is the marketing mind game. And some of you might be thinking, well, Jessica, what the heck is the marketing mind game? And the marketing mind game is when you get caught and you don't know what to do. Should I be marketing grain right now, or should I be holding on to that grain and waiting for the market to recover, or at this point continue to go up? And the first recommendation that I have for you is to evaluate your current financial situation. And I think one of the hardest challenges for me is not knowing what your balance sheet and what your cash flow look like personally. So that's where you need to start, is with where are you at financially? Do you have some bills that need to be paid? And you need to make those decisions. Next is looking at your cost of production. We're actually getting ready this week to launch the 2021 cost of production estimates through our Nebraska crop budgets. And I'll tell you where you can find those here after a while. But looking at where we're at, both corn and dry edible beans are presumably the market price is currently above the estimated cost of production. So as I look at the straight cost of production, I think there's some benefits, potentially 50 cents or more on the corn side to lock in some profit there, depending on what your cost of production is. I would encourage you as we prepare for the winter to do some shopping around though for those inputs, and make sure that you are getting the best price for those inputs, because usually as we see the market go up, we'll see those input costs go up as well. The next one is be satisfied with the decisions that you've already made. Again, I mentioned it before, but maybe you did do some marketing of the 2020 crop this summer and you're going, darn it, was that the right decision? And the truth is, in August, it was the right decision. When we were looking at a market that was cash price near $3, that was really a struggle for a lot of producers. And boy, if we would have realized the estimates that they were showing in August, I think there'd be a lot of producers who were really hurting right now. Now, we had some weather challenges late in the season that drastically changed that market outlook, but you can't go back and change the grain that you've already sold. I like to encourage folks to be cautious of information overload. There is a million newsletters, text messages, YouTube guys talking about what's happening in the market. My recommendation is to pick 2 to 3 sources that you really trust, and follow those consistently. I like to use the USDA WASDE report. I also follow the text messages from my local elevator, and then I might listen to one commentator on what's happening within the markets, whether that's AgriChat or something else. Next is having realistic expectations of the market. Right now we're sitting at 410. I could probably go to town in the Scottsbluff gearing area and sell cash around that price today. But I don't know that the market's really going to bump up to say 450. So for a lot of us in this part of the world, or this neck of the woods, we don't have on-farm storage. So every month that you let that grain sit there, you're accumulating storage expense. So what are you waiting for? Do you think the market's really going to move high enough to compensate for that 3 or 4 cents per month per bushel that you're being charged in storage expense? Have that realistic expectation about what's happening there. And finally, the best recommendation that I can give you is to actually physically write out a grain marketing plan. This does a couple of things for you. Number one, it allows you to really conceptualize what your sales are going to be throughout the year. So for example, let's say that financially you're fine right now, but you know you have some big payments coming up in the spring, and you want to make sure that you've got some good sales and some cash on hand. So you can write out that date timing, and then also looking at what your storage expense is, and setting some realistic price targets in order to make sure that you're not that you're not holding that grain too long. So this is something that I really encourage you to do. I also encourage you to share that plan with somebody else, whether it's your spouse or your business partner, or even your local grain merchandiser or your banker. It's really good to have somebody else on your team to help keep you true to that grain marketing plan. Some tips for writing a grain marketing plan: break it into smaller amounts, usually in 1,000 or 5,000 bushel units. Set both price targets and sales deadlines. I can't emphasize that enough. You need both. So I'm going to sell so much by the end of the year. I'm going to sell so much in January. I'm going to sell so much in February. Especially on this post-harvest side, I don't want you to get caught paying too much storage. Consider your cash flow needs. We've already discussed that. And then also consider your other sources of income. I think around the valley this year, we'll have some crop insurance payment. I know we had some drought issues. So you might have crop insurance moving forward from 19 into the 20 year. But you also might have a crop insurance payment this year that you need to consider. We do have the Coronavirus Food Assistance Program payments, which came out, as well as the market facilitation payments, or the trade aid payments. You also might be seeing some Farm Bill program payments, and I'm going to talk about all of those more in depth later. But there's a lot of what I will call ad hoc assistance coming from the federal government on top of crop insurance that we need to watch. Again, watch your storage expense and your carrying charge. I'll talk about that on the next slide. And then again, share your plan with someone else. So one of the things that I've been watching and I like to look at as a signal from the market is the carrying charge, which is the difference in price between futures contract delivery months. So for corn, what I will do is I'll look at the difference in the December 20 contract and the March 21 contract. And these are how the elevators will determine your cash price. Right now, they're only offering an 8-cent difference in those contracts. So what that's telling me is that's not very large. When I think about the fact that from December to March, I'm paying 3 to 4 months storage at about 4 cents a bushel per month. So it's not a big enough gap for me to cover my storage expense. And what this is telling me is that the market would like me to actually sell my grain now rather than holding it into that March, May, or July timeframe when I look at the difference between what they're offering and my potential storage expense. You also see that the September contract is September 21 contract is actually currently trading lower than the December contract as of last Friday. So again, emphasis that they're asking you, the market is signaling you potentially not to sell that grain quite yet, or excuse me, not to store that grain and consider selling it right now. This isn't usually how the corn market works. Usually we'll see some carrying charge or a large enough difference there to pay your storage. But right now, the market's saying, no, we need that grain now. I want to take a minute and talk about dry edible beans. But before I do that, Nevin, are there any questions in the chat that I need to?
No, I haven't seen any since Tyler's question, so I think you're good to go unless someone has one now.
Okay. So I want to point out that I really don't do much price prediction, but I do like to watch the dry bean market pretty closely. And as we look at the dry bean market, we know that the price of dry beans and the price of corn are correlated at 92%. So those prices move together. And what's really interesting about that is that I can use the price of corn to be a predictor of the price of dry edible beans. And if you've heard me talk before, that relationship is if we take it down to a price per pound for corn and a price per pound for beans, if I multiply that price per pound of corn by 4, I'll get the approximate price of beans. So I expect the dry bean market and dry bean contracts to be somewhere in that $30 to $35 range coming into the 2021 contracts. Solely based on the fact that we're seeing higher corn prices. Of course, there are other factors, right, that influence the price of dry edible beans. So we can see that market might move a little bit depending on whether you're growing pintos or northerns. The slide on the screen does not distinguish between the variety of dry edible beans. We know that right now Great Northerns are priced slightly higher than pintos. I think it's going to be interesting as we watch this market to see what contracts do become available here late in the year, and then also what the seed availability is for dry edible beans moving forward. I think it's an interesting market, and when we see again that price of corn go up, the dry bean market has to compete for acres locally in order to maintain its production. So it's going to have to price those dry beans at a competitive rate in order to get producers to plant them.
I believe Mike Manning just asked that question. What drives the relationship? I think you answered that by saying it was the competition for acres.
Yeah, and I would say that there's other factors that play into it, but again, they want to make sure that they get their contracts filled, right? Because they have contract buyers that they need to fulfill during the year. So they know that they need to get approximately X number of acres to fulfill those contracts. So they're going to price those contracts competitively to get those acres out of corn and into dry edible beans. So I want to talk a little bit about support programs. I think it's been a really interesting year as far as looking at what the Trump administration has done for payments to farmers for various reasons. And unfortunately, I don't have, 3 hours to go through the innuendos of every program, but I do want to do kind of a 30,000 foot flyover of what has been coming to producers in terms of support programs. So the first thing I want to point out is that government payments, whether they were from the Farm Bill or these ad hoc assistance payments from the coronavirus or from the trade payments, um, have been increasing. If we look at the last 4 years under the Trump administration, we have seen that these payments have increased. And something that I've been thinking about is, with a new administration coming in, um, I don't know that we're going to see that high of government payments from a Biden administration. And so this really is kind of an interesting place to be, that the market is coming up, right? The corn market, the soybean market is on the rise, but there's potential for 2021 to actually have a total lower net farm income because we aren't receiving as high of government payments. And so that's a really interesting place to be as a producer, is that if I'm adding all those payments in right now to my total cost, to my total revenue, looking at next year, yes, the corn price is stronger, but I'm not receiving those government payments. So my total net farm income may be lower. And I know a lot of producers don't look at the government payments when they're making every decision. But it is true that for 2020 in particular, they have received quite a bit of support through the Coronavirus Food Assistance Program and through the Market Facilitation Program, which are the trade aid dollars. So just a little bit of a breakdown so you can see those more clearly, looking again at the FAR 2020 forecasted. The crop programs, which is the bottom box, which is yellow, that's the Farm Bill programs. The next box is conservation, and those boxes can change year to year, but the largest change that we've seen is in what we're calling here supplemental and disaster assistance. And we can see that right now those supplemental programs are outweighing even the traditional crop programs that we receive from the Farm Bill, which would include the PLC and the ARC programs, or price loss coverage and agriculture risk coverage programs. So really kind of an interesting place to be right now in thinking about what's going to happen for the 2021 production year. So just a larger picture, this time looking at total US programs, very, very similar, rather than just Nebraska, that those supplemental disaster assistance programs or those ad hoc programs are providing quite a bit of that payment. And so as we think about looking forward to a 2023 Farm Bill, boy, it's interesting that that really the support that producers have been getting were not authorized under that Farm Bill. And so as I think about that, that might spur some changes within the Farm Bill, but also thinking about the fact that we're probably not going to be dealing with the coronavirus, and likely under a different administration are not going to have the trade challenges that we faced with the current administration. So I do want to step back. I've talked a little bit about the Farm Bill. Remember, the 2018 Farm Bill provided program payments for 19 through 2023, and then we'll be looking for a new Farm Bill. And we're actually, we need to start working on a new Farm Bill now. The Farm Bill programs are the Price Loss Coverage Program and the Agriculture Risk Coverage Program, and that has two options, either at the county level or at the individual level. Now, you've already elected, your first election was for the years 2019 and 2020, but beginning in 21, we will be able to flip between programs, and you will get to choose what program you enroll in every year. Now, I know that the local FSA offices are already calling and asking you to enroll in these programs. The deadline to enroll actually is not until March, but you will need to enroll in a program for 2021. Now, the previous Farm Bill, the 2014 Farm Bill, you did one enrollment and you stayed in that program for the life of the Farm Bill. But for the new iteration of the Farm Bill from 2018, we are going to be able to select each year what program we are going to be in. So the bulk of base acres, talk a little bit more about this in a minute, in the US elected PLC for 2019 and 2020, and only about 18 to 19% selected Ark County. This is a flip from the previous Farm Bill. So Ark County was popular in 14, and now we're seeing that corn base acres are more popular in the price loss coverage program for the 2018 Farm Bill. So one thing I want to emphasize is the fact that it doesn't matter what you actually plant. What matters is what your FSA 156 Easy form looks like. And here's a form I pulled offline from a farm in Oklahoma. And what we're looking at are what the actual base acres on your farm are. So if you look at this form, kind of in the middle on the left, you can see that the farmland is actually 305 acres. But if we look at the base acre total down at the bottom in the red box, the actual total is 177.53 base acres. So the federal government does not pay you on the actual farmland or on the actual cropland. What they pay you is on the base acres and the crops that are assigned to those base acres. So for example, this farm has wheat and grain sorghum, but they could be planting corn. It doesn't matter what they actually plant, their payment rate will be based on wheat and grain sorghum. So if you want to talk to me about your 2021 enrollment for the Farm Bill program, I need to know the information on this form in order to be able to adequately assist you with making that decision. Again, I'm trying to stay at a 30,000 foot view, and I want to talk about why the price loss coverage program was more popular for the 19 and 20 enrollment, and I think will be more popular for the 2021 enrollment. And that's because this program starts to trigger when prices are on the downward slope. So if you're concerned about prices dipping down at some point, that's when we'll trigger payments. Now, at the estimated price levels, I don't think we're actually going to see a price loss coverage payment for 2021 unless we have some sort of, again, major adjustment in the marketplace for corn. Wheat, on the other hand, for base acres looks good in the price loss coverage program. And I'm happy to talk those other minor crops that you may have base acres for, including, barley or oats. Maybe sunflowers are also common on a few farms in the Panhandle region. The agriculture risk coverage program is a revenue-based program that looks at both yield and price. And there's a couple of things that we need to think about when we're looking at this program. First is that you can enroll at the county level or at the individual level. And we actually saw some farms go into the agriculture risk coverage program at the individual level for 19 and 20 in our region. And basically that's because it's more likely that a farm is going to see a yield loss than a county is going to. So if you're looking at this, the question is the combination of the price and yield going to dip? But the challenge here is that we use a benchmark revenue. And so that means that at some point prices have to go up or the market and the yield have to dip low enough in order to trigger a price. So unlike our other illustration, we have to see that rise and then that fall in order to be able to trigger especially an Ark County payment. Now, if you're in the Ark individual program, let's say you have a hailstorm, then we might see that Ark individual program really come into play. So I think most folks in the region for 2021 are probably going to stay in the price loss coverage program. There is some consideration for the agriculture risk coverage program at the individual level. There's more details that go into that, and I would be happy to talk to you directly about your own firm operation, and we can walk through that individual program if that's something you're interested in. So just to summarize, PLC support will kick in before ARC County support for a downward price movement. But at increasing price levels that we're seeing right now, both ARC County and PLC support probably won't be there for 2021. We do know that there's a new mechanism in the program that that we could see the reference price and the benchmark ratchet up to near equivalent levels of support if we see substantially higher prices. I would encourage you to consider the ARC individual program on a farm by farm basis. And again, it's too complicated today to talk to you about, but I would be happy to do that on an individual one-on-one basis. A lot of questions I'm getting right now are related to lease agreements. So I want to again 30,000-foot view some lease agreement information. We are having a completely virtual workshop in January that will go over some of this information more in depth. I would like to point out, starting that crop share lease arrangements are still king in this region of the world. And so one of the most common questions that I get across my email or over the phone is, what is a typical share arrangement for given crops? And I would say the bulk of crops, corn and wheat in particular, are still at 1/3 and 2/3, with a lesser share going to the landlord. On the dry beans, we have seen some 25-75, but it is moving more towards 1/3 and 2/3. Hay traditionally is 50-50, and sugar beets are traditionally cash rented. Looking at what the cash rental rates are for the Panhandle region, the ones I normally get questions about are gravity and center pivot irrigated ground. Gravity is about $105 an acre for cash rent, and center pivots at about $140 an acre. This depends on the quality of the ground, the ease of irrigation, the age of the irrigation equipment, and then also what crop is going on to that ground. Two crops in particular that fetch the higher cash rental rates would be sugar beets and potatoes. I have heard of rental rates that are higher than this, but those are very special circumstances, again, in a specialty crop. So that's some information there. And again, if you would like, I can share information about our upcoming workshop that will go into detail related to agricultural land leasing. One thing I do want to point out, though, is that I really would encourage you to have a written lease agreement. We have a great resource at our fingertips called aglease101.org. And this website has example written lease agreements that you can utilize for your farm and ranch operation. And if you don't have a written lease, I would encourage you to get one. It's not about the two people who are currently in the agreement. It's about what happens if one of you unexpectedly passes, and for their family members or their heirs to know what was agreed to. So written lease agreements are an important part of a complete farm and ranch estate plan. And I would really encourage you, if you don't have something in writing, to go ahead and get that done as we enter the winter months. So some closing thoughts before I open it up for questions would be to close out this year strong. Number one is to meet with your tax accountant early. Again, we had some ad hoc assistance through coronavirus food assistance program, as well as market facilitation payments, but also some of you qualified for paycheck protection loans. And I will tell you, we don't know exactly what to do with those paycheck protection loans as far as taxes go. So meet with your tax accountant early. It's likely that, especially if you have one of those PPP loans, that you might actually have to amend your 2020 tax return later in 2021 once they determine how to handle those loans. So please, please, please go meet with your tax accountant early. It's really important, especially if you have, again, that paycheck protection loan, that you do that. I would go ahead, as we think about coming into the winter months, to update your balance sheet and your cash flow. Again, plan for increase in prices, but potentially decreased overall income, because we're not expecting that ad hoc assistance from the federal government. Review and update your estate plan. I cannot emphasize this enough. If it's been a few years since you read over what your will is and what your estate plan is, I would really encourage you to do that, and to make an appointment with a lawyer to ensure that everything's in order, especially if you've had a death, a divorce, or a birth in your family in the last year, that you make sure that your estate plan is up to date. Shop around for inputs and services. I mentioned this earlier. Make sure that your cost of production is under control. And the last one is hold your annual meeting. If you are functioning under a legal entity such as an LLC, most of your operating agreements state, or your organization papers state, that you will host an annual meeting for your entity, and that you will submit typed minutes for that annual meeting. So I would encourage you, even if you're the sole proprietor of that entity or the sole owner of that entity, that you sit down and you type up some annual meeting minutes. So with that, I do have a couple of reminders. If you'd like to see any of the information I shared today, including crop budgets or farmland rental rates, you can go to farm.unl.edu. That is our farm management website. You can also see recorded workshops and the latest news articles from our team. Our team is also doing a weekly webinar series, which happens Thursdays at 11 a.m. Mountain Time. This week, we're actually releasing the 2021 crop budgets on our weekly webinar series. And then also, I mentioned that we'll have a virtual farmland lease workshop specifically for the Panhandle, January 7th, and there will be more information coming out from that. My contact information is at the bottom of the screen. You're welcome to call my office. I promise I will call you back, or email me at jgroskopf2@unl.edu, or follow me on Twitter, Panhandle Ag Econ.
Thank you, Jessica. We've only got a couple minutes probably for questions. So does anyone have any questions for Jessica?
So Nevin jokingly asked me yesterday, what does a new administration mean? And I highlighted a little bit of it, but I would say a new president might not be my largest concern. What I'm really interested to know from a Biden administration is who is going to be the USDA secretary, and then also looking at who is actually going to be in the leadership of the House and Senate Ag committees. I think those pieces are a bigger question for me, and will help us determine what ag policy will look like moving forward.
I think we're running close on time, so I think we'll go ahead and just call for a break and transition to the next speaker. Thank you, Jessica, for your presentation.
Thank you.